Hey everyone, in this video, I'm going to highlight my 4 top growth stocks for December, which I gave you all 6 days ago. I'm going to update that recommendation and let you know what the changes have been since then. I'm also going to say whether or not any of those 4 stocks are no longer a buy or if I'm changing any of those recommendations. So if you didn't see that video 6 days ago, you'll be first getting the idea of what 4 stocks I have as top growth stocks to buy for December. If you already saw that video, then you're getting an update from those 4 stocks and how they're doing so far. Now, one of those 4 stocks has announced earnings between then and now. So I'm going to review those earnings results from the one company that reported earnings in that group. And I'm going to let you know if I think that one is doing well or if I want to take that one out of my 4 growth stocks to buy. So let's get into the 4 growth stocks, how they're doing so far.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the 4 growth stocks that I recommended for December were Fiverr, Zoom Video, DocuSign, and Nvidia Corporation. So far, in the 6 days since I made that announcement, DocuSign is doing the best, returning 9.7% in 1 week. That's phenomenal returns. Zoom Video also doing well, 5% returns. Nvidia at 1.72%, also doing well. The laggard between these 4 is Fiverr International at negative 2.31%. So 3 out of the 4 stocks I recommended are up, and overall the 3 stocks that are up would be up more than the 1 stock is down. So I'm happy with the performance. If I owned all 4 of these stocks, I would be happy with the performance. I would be happy with this kind of performance for longer time periods as well. Now, the one stock that reported earnings in this 4 is DocuSign. That's the one I'm going to review. And you can see DocuSign is the one that's up the most in the last few days. And it's because the earnings were so good. And I'll talk about that a little bit later. But first, let's look at the valuations. So, looking at the forward price to earnings ratios of these 4 growth stocks I recommended, you'll notice that none of them are very expensive. In fact, Fiverr is downright cheap at a forward price to earnings of 11.61. Zoom is at a forward PE of 15.74. DocuSign at a forward PE of 18.45, and it was even cheaper when I recommended it. And Nvidia is the most expensive at a forward PE of 24.12, but you can understand the excellent prospects Nvidia has going forward with AI, why it's a little bit more expensive. But still, given its excellent prospects, I think a forward PE of 24 is an excellent risk versus return for Nvidia investors. So I still think these 4 stocks are good values, even at the current valuations updated 6 days forward. And I still think investors can get in here and feel good about the valuations they're getting in these 4 growth stocks. So one of the things that happened with growth stocks here in 2023 and late 2022 is they all saw their revenue growth rates decelerate. So that doesn't mean that they stopped growing, but it's just their growth rates decelerated. And that was a result of macroeconomic factors, mostly the significant increase from the central bank of interest rates, rising them by over 500 basis points. That caused the economy to slow down, and that caused revenue growth for these companies to slow down. The metric I have here is cash flow from operations to sales, which you can see started to slow down from the peak levels in 2021, right? These were times when the growth rates were explosive for these companies, but they started to moderate into 2022. But then look, in the middle of 2023, they started to turn these trends around, these 4 companies specifically, which is one of the reasons why I've recommended these 4 growth stocks, because they're trading at valuations that are incorporating this big slowdown and the risks between growth stocks and the slowdown in their growth rates. But they've turned things around. You can see Fiverr has turned around its cash flow from operations to sales up to 18.48. DocuSign has boosted it up to 23.7. Zoom has boosted it up to 32.44. And Nvidia up to 41.99%. Nvidia's performance in 2023 has just been explosive. You can't use too many adjectives for how good Nvidia's performance has been in 2023. So you can see these companies have turned things around. They're still growing. They're turning that growth into cash flow, and they're trading at cheap valuations. That's the kind of investment I'm attracted to. Companies that are turning growth into cash flow, not companies that are just growing revenue while losing tremendous amounts of money on the bottom line. I say a lot that it's not impressive if you take a $100 product and you sell it to customers for $50 and you come back to investors and tell them and brag to them about the growth you're achieving. Yes, you're growing your business. It's because you're giving your customers $100 of value for just $50. That's not a sustainable business model. Of course, you're going to grow. You're going to grow sales, but you're also going to grow how much money you lose. That's not impressive to me. That's not what I look for. I want to see companies that are growing, but I want to see that growth lead to profitability on the bottom line, lead to cash flow from operations. And if they're negative, I want to see those metrics improving as the company grows. I don't want to see them moving in the wrong direction. That's what I saw with these 4 growth stocks. That's what I continue to see with these 4 growth stocks. So let's look at DocuSign's earnings and what was so good about it. So in its third quarter of fiscal year 2024, DocuSign delivered $700 million in revenue, which was 9% year-over-year growth, but the growth internationally was 26%. Billings increased by 5% year-over-year to $692 million. Remember, with DocuSign, they bill customers, right? They sign a contract with the customer to get this customer to spend, let's say, $50 million over the next 3 years. I'm just throwing out a number. That will turn into revenue as DocuSign performs on that agreement. First, it comes in as billing, and then billings turns into revenue as the customers use up whatever they signed up to use up from DocuSign. So billings is an important metric for DocuSign, and 5% growth is mediocre, but investors were still happy to see growth in this metric and near double-digit growth in revenue. Now, one of the downsides of investing in DocuSign stock, I've mentioned this before, when I'm looking at a stock, I don't just look at all the upside. I'm not a cheerleader or a fan of these companies. I look at them with a skeptical eye because they're after my money. And if I'm going to put my money into something, I want to make sure that it's secure, that it's going to deliver a return on investment. So I'm skeptical of this right here. DocuSign saying that they have a large market opportunity of $50 billion. I've mentioned this over and again with DocuSign that its market opportunity is small. It's not large, small. A $50 billion total addressable market is a small market. That's a small market. To put that into perspective, the spending annually on hotel and resorts is upwards of 1.5 trillion. Spending on advertising is expected to come in at $934 billion in 2024. Home improvement is an industry that's expected to bring in over $900 billion in 2024. You see where I'm getting at? Those are large markets, right? This e-signature market is not a large market. A $50 billion opportunity is not large. Now you can say, well, DocuSign is expected to generate around 2.5 billion in revenue, and considering the 50 billion total addressable market compared to where they are now, they have room to expand. And I would agree with you there if you're looking at it from that perspective. But just looking at the market opportunity and comparing it to, relatively speaking, other addressable markets, it's a small addressable market. But DocuSign is the market leader. It's the world's #1 e-signature solution. So it can grow to capture a larger piece of this market opportunity, which will be good news for DocuSign stock investors. So here is the main reason, along with its cheap valuation, that I am attracted to DocuSign stock. The business model is lucrative. It's an asset-light business model that generates strong cash flow. So what they show you here is their operating cash flow continuing to grow as a percentage, right? 8% growth, 21% growth, 35%, 31%, 38%, generating operating cash flow from 53 million to 137 million, 234 million, 211 million, $264 million in operating cash flow in a quarter where they generated less than $1 billion in revenue. So their revenue is turning into cash because of the business model, because of the foundation that it's built on. It's a profitable, it's a lucrative business model. Same story with free cash flow. 6%, 7%, 32, 27, 34. Free cash flow of 113 million, 215, 184, 240 million. So the business generates strong cash flow while it's growing at the same time and has market leadership. I like to see that, even though there are some downsides, like the fact that the total addressable market is small. But on the other side, when you operate in a small total addressable market, you kind of protect it from new entrants, right? Because if you're operating in a massive industry, that's bringing in a lot of competition from other people that are looking at that industry and saying, oh my God, look at how big that opportunity is. I want to invest billions of dollars for the chance of getting even a small piece of that big, big pie. Think of the electric vehicle industry. Think of how many billions of investment and new companies came in to the EV industry over the last 3, 4, 5 years. It's because the opportunity is so big, it's attracted so many investors, so many new companies coming in, so many new vehicle manufacturers and sellers that are now coming in, and you're seeing what that competition is doing to participants in the industry. The one good thing about operating in a small addressable market is you're not having that much new entrants. You're getting competition, but it's from existing players. New people, new enterprises are not eager to invest and enter a market where the upside is not so big. So you can see why DocuSign stock investors were excited and why the stock was up nearly 10% in the last 6 days. I still like DocuSign stock. I just think electronic signature is a no-brainer. It's so much more convenient than signing documents in person. And where are you going to store those documents that you sign in person, right? If you're a business and you have a 20-page document that you have a customer sign, then you need to store that 20-page document somewhere, and you're going to have to pay for storage. You're going to have a whole room maybe where you're just storing documents. And then what if you need to recover that document? What if you need to look at that document? Think of where you need to go and search for your file cabinets to pull out that document and look through those 20 pages for the information that you need, versus if you have it stored electronically, not only are you saving on cost, but you can just do a quick PDF search to go to the section that you want to go to. It's just a no-brainer for me. The industry overall should grow, and DocuSign, as the market leader, is in a good position to benefit from that. My 4 growth stocks to buy in December, although they are up 3 out of 4 of them, I still like these 4 growth stocks. I'm not taking any of them off of my list. I still think investors can get good returns from these 4 growth stocks, even if they buy them now while they increased in value slightly for 3 out of the 4 of them, and Fiverr is down. But I don't think that I need to take Fiverr off the list. I still like Fiverr as well. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.